Hello. In this tutorial, we'll cover entering fixed overhead expenses into your labor pricing for profit version 6.0 software model. Entering fixed overhead expenses properly will do two things for us. First, it will ensure that we have a correct labor rate in each of our departments, and second, it will help the software accurately project your cash flow needs throughout the next year. So let's get started. To enter fixed overhead expenses, we'll simply go to the cost input section of the setup menu on the left-hand toolbar. When the cost setup window opens up, we can see we've got the cost types section on the right-hand side. Again, in here we'll enter all of our costs in this same section, and for this tutorial we're going to focus on the fixed overhead item, and so we're going to click on the radio button for fixed overhead expenses. As soon as we do that, the cost setup window will change and configure itself specifically for our fixed overhead expenses. To enter new fixed overhead items, we'll simply click on the new icon here on the bottom, and when we do that, the fixed overhead entry screen will open up. Now, entering fixed overhead expenses is very easy in version 6.0. We simply start out with, on the first item, we're going to enter in the fixed overhead expenses, and so we'll start out with our expense being advertising. As we go to the next item, the method to apply the cost, we've got several options available to us. First off is monthly, which simply means it's this particular expense is going to happen every single month throughout the year. The next one is quarterly, which means the expense happens once per quarter. Now, it doesn't necessarily mean that it's going to be January, April, and so on. It very well could be February, May, and quarterlies on that point. You'll still specify which month it begins, but it's going to happen once per quarter. Semi-annually simply means it's going to happen twice per year. Annually means it's going to happen once per year. And manually gives you the ability to manually control when those expenses are going to hit. So you can choose any one of those. In our particular case, we're going to say this expense happens monthly. And what month does the cost start in? Well, it's going to start in January. We're going to do it, pretty much allocate dollars for this all throughout the entire year. So it starts in January. And the amount per month, well, in our case, we're spending $1,200 per year. You can see a couple of things happen. As soon as we enter in that dollar amount, over on the right in the monthly allocation section, you will see it is now allocated $1,200 per month throughout the entire year for a total cost of $14,400. Now, if I had said that this is an expense that happens quarterly, and we tell it what month it begins, well, we said it starts in January. Then you can see it immediately allocates $1,200 per quarter in January, April, July, and October for a total of $4,800. If we said it's a semi-annual expense, it simply allocates $1,200 in January and July. So we have full control over how it's going to allocate those expenses throughout the year. So we'll leave it at quarterly. It's going to happen $1,200 we're going to spend in January, April, July, and October for a total of $4,800. We can put in anything we want in the comments. This is purely for your information. So this is for a newspaper ad. Again, you can put any notes that you want in here. The last piece of the puzzle that we have when we're entering in fixed overhead expenses is to allocate this expense to various departments. So what months are these, or what departments are these expenses going to benefit? In this particular case, you can see that we are now entering for service. Each of the departments that we set up earlier in our company will show up in the department list, and service is what's highlighted here in gray, so that's the area that we're entering. And we're going to say that this newspaper ad really is going to benefit 95% of the service department and 5% of the installation department, and nothing in the retail store. As you can see at that point, we've now have a total allocation of 100%, and just like with every other expense we have in the company, we need to allocate a total of 100%. Not 95%, not 105%, but 100% of this expense needs to be allocated to a specific department. Once we've done that, we now have access to click on the Accept button, and when we do so, it now adds that particular expense to our company. If we want to do one other expense, again, I'll click on New, and let's say we have a expense for charitable giving. that we do within our company. And we do this, we're going to say it's manual. So we're going to click on manual. At that point, we can now control specifically the dollar amount that we want to go at any given time. So we're going to say that we're projecting to give $1,000 in January, and maybe we're going to do something in June, and we're planning something toward the holidays. We're going to do another $1,200. So we can plug those dollar amounts specifically in the given months that we would like. Again, we have to allocate this to our departments, and so we're going to allocate this expense. Let's say we're going to do it based on a percentage of sales, and so in our particular company, that means that 65% is in service and 25% is in installation, 10% is in the retail store. So we can accept that given expense. Now, one other shortcut that I want to share with you here is just in terms of entering expenses. If we have items that are the same most months, but maybe we have a down payment. Let's say workman's comp, for an example. Many times we have a down payment, and then we'll have 9 months at a given rate, and then we take 2 months off. We can speed up the entry of that particular expense. And again, we'll go ahead and click on New to say we want to enter a new item. And we're going to enter in the description itself. To speed up the entry, since 9 of the months out of the year have the same amount, we can start out simply saying that this is going to be a monthly expense. It's going to start actually in February. Let's say that's where our down payment takes place. And the monthly amount, put in what the amount is for each of the individual months that are the same. So let's say that amount is $1,500 per month. In our comment suite here, we can say, okay, down payment in February of, and again, we'll call it $5,000. Then 9 months at $1,500. Okay, so at this point, to make entry easier, you can see that the software is automatically allocated $1,500 per month throughout the entire year starting in February. Now we can simply come back here and change this to manual and just change February to $5,000, and we can move down and change December to 0. So that automatically changes our allocation to that down payment in February, equal payments for the next 9 months, and then 2 months off. It just saves you from having to key the amount in for each individual month. Just a quick shortcut that you can use. Again, we still have to allocate this to our departments, and so we'll say that this is, again, 45% service and 55% installation. So we can accept that dollar amount. It then puts it on our report. And again, on the method here, you can now see the allocation that was used for spreading this expense. Thank you for watching this tutorial. In the next tutorial, we'll cover adding variable overhead expenses.